Today we are going to start the first lecture of external financial reporting decisions, which is external financial statements and the revenue recognition. This is the first topic. What we are going to discuss today is we'll discuss concept of financial accounting, statement of financial position, which is previously in tax books. This was called as balance sheet. Which is renamed as statement of financial position, income statement, and statement of comprehensive income, statement of changes in equity and equity transactions, statement of cash flows, and after that we'll totally discuss a new topic, that is revenue recognition, after delivery, and how we recognize revenue for long-term construction contracts. Before I start, everyone has a language. Suppose when we speak English, we speak other languages. Same way when the business speaks business language, and this language is into financial statements, which is we discuss assets, liability, equity, expenses, and income. If we are individuals, we have cars, we have home, we have golds, we have furniture, we have cash, we have bank accounts, we have dollars, pounds, other currencies, and these are all our valuables. Same way in business, every business have furniture, they have computers, they have expenses which will materialize in more than 1 year, so they are generating assets, they are borrowing, taking money, they have liabilities, they are putting money from their own pockets, they have equity. These all has to be in a typical format of financial statements. What are those financial statements? This is what we are going to discuss. Even if you don't have accounting background, this is from a reporting perspective. We should have an ability as CMAs how to read the financial statement, because this is the basic language of a business. We may have a very good business idea. This idea will be very nice, very attractive, but the reality of every business plan has to materialize in financial and non-financial information in a very prescribed way. That is set of financial statements. We'll start our discussion. What is the objective of general purpose financial reporting? The purpose to make financial statement is to aware the shareholders, stakeholders when we say means anyone interested in our company, either it's a supplier, it's a buyer, it's a customer, it's the owners, these are employees, these are banks, these are government authorities, anyone who has some interest in our company, we classify it as stakeholders. So objective of making financial reporting is to educate the stakeholders, is to inform, aware that what is our strength in terms of assets, liabilities, equities, and other stuff, right? This is what is the basic objective of making financial statements. Especially when we are talking about listed companies, they are listed in stock exchange. We will see the financial portfolio, financial reports, and then we will decide that how they are performing. So financial statements are very important documents which helps the stakeholders to take effective decision. Should they invest in company more? Should they de-invest? Should they sell the shares? This all will be dependent on income statement, balance sheet, cash flows, and statement of changes in equity. Theoretically, we say there are so many kind of accountings. One is financial accounting and one is management accounting. We are going to do management accountancy, but no management accountancy can be can solely operate. Now education reality of the practicality is everything is embedded. You should know IT, you should have strong skills about internal controls, you should know how to take the performances, how to know about audit, for especially the internal audit, financial statement analysis. These are all capabilities of a management accountant. So management accountant is purely focusing on managerial stuff, adding value into management by your analysis, by your reporting, by your thoughts, and by your creative leadership skills. That is for management accountants. Financial accounting is following a body, you can say, who makes standards, like in United States, US GAAPs, generally accepted accounting standards. As financial accountant, the more expertise is how to read, how to make, how to understand the standards given by the bodies, and to start using them. This is more expertise, and this is for the external world. All financial accounting standards, they are for external world. They create standardizations, right? And management accountant is more into internal managerial stuff. So both has two dimensions, but nowadays management accountant without understanding the accounting stuff will be not comprehensive. That's why we study financial accounting and we study the management accounting together. Who are the users of financial statement? Anyone who is interested. It can be classified as the direct interest and indirect interest. Directly means if you work in a company, you are an employee, and you are always concerned that this company should be very nice, very growing, and they should give dividends to, if they have employee scheme option for shares. So all time, employee, shareholders, auditors, and other suppliers, management is concerned in your financial statement. And outside, of course, there are so many companies like Moody, Poor's, Fitchers, Central Bank, SEC, Securities Exchange Commission, and there are some regulators who is regulating your bodies, your companies, your turnovers, your industry expansions. So financial advisors, stock market, and the regulatory authorities, these are the indirectly, they are watching you for the regulatory and compliance purposes. We can classify the same thing as external users and internal users. Internal users are easy to understand. They are within the company itself. They might be employees, financial controller, CEO, they might be shareholders. This is internal. And then we have externals. Externals are more into investors, those who, for example, people are monitoring the share of Google, Facebook, in other companies. If they are growing fine, so they want to invest into, they need financial statement quarterly, yearly, so they can see how things are moving on. So investor, creditors, financial advisor and analyst, and stock exchange regulatory agencies, they are the external people who are really interested in your organization. Moving forward, what are the features of the financial statement? It's a set of certain statements which is comprehensive. In accounting knowledge, first we make a JV, general voucher. It has two effects. One is debit and one is credit. This goes in ledgers. Ledgers are like T accounts. They are having again debit and credit side. You will close all the ledgers and you will make a list of ledgers. This list of ledgers is called trial balance. In trial balance we have 5 stuff, like one is assets, liability, equity, expense and income. Expense and income, we'll put it in income statement. That is here, income statement. It will comprise over your expense and income. The rest 3 things like assets, liability.